Hey, my name's James Nicholson and welcome to this week's best mortgage rate. This is a great video this week because if you've been watching this channel in the last few days, you've seen bank rates have started to drop. Mortgage rates have started to drop again. And it's really important to understand why. And firstly, it's due to the inflation data hitting target. That meant the bigger banks, so not these lenders that we're going to talk about here, but the bigger banks, JP Morgan Chase, where Barclays and those likes go and borrow money themselves, they reduced their interest rate, which is called the swap rate. So the swap rate went down off the back of some good inflation data, but also because the market is quieter at the moment. So there's tons of people that want to buy a house, could afford to buy a house, but they're not buying it. And the reasons for that is some people are waiting till the election. Well, that's pretty much done now. We've got a week left of that. So they just want to see what happens, who gets in power, what impact that has. Is there any policies that maybe are worth holding on purchasing for? Some people are waiting for interest rates to drop at the Bank of England, hoping that that will lead to cheaper mortgage rates. So that could be as much as 20% extra buyers in the market when that happens. And some people are waiting because they feel that house prices are going to drop. And so they want to catch them when they're at a lower level. And so that means that lenders aren't as busy, aren't making as many transactions. And that means they're making less money at the moment. So the big banks, the rates to help the little banks to get more a better deal out there to try and stimulate the market again. This happened last year. So in December, the market went quiet. Then they did this and rates started to drop in January and February, and that stimulated the market and got it quite busy again. So let's talk about the rates and what we've got on offer this week. So this first slide is HMOs, which stands for House of Multiple Occupancy. These are specialist mortgages. So if you rent out on a room-by-room basis, they're a little bit more expensive because they know you're making more profit, and there's not loads of lenders that do this, right? So Mortgage Works here, they've got two HMO mortgages. 5-year rate is at 5.54%, and the fees on that are 3%, which is quite high. The 2-year deal is 5.39%. Fees on that are 3% again. Both of these have a loan to value of 75%. So that's definitely worth checking out if you're looking for an HMO mortgage. Next, limited company mortgages. So when you invest in buy-to-let property, if you invest in your personal name, the new rules that the Conservatives brought in mean the taxes are quite high. And so how you really should invest now on new transactions, if you were going to buy something today, a buy-to-let, is through a limited company. And so that is the best way to buy. It means the tax is significantly lower. But again, because there's less lenders, the rates are a little more than you might get if you had it in your personal name. But the tax, the better tax situation far outweighs the higher rate. So 5-year rate, same as the HMO, 5.54, 3% fees, 75% loan to value, meaning you need a 25% deposit or 25% equity. 2-year deal, 5.29%, 3% fees, again, and 75% loan to value. Now, the 3% fee split over 5 years isn't so bad. It's quite a lot to stomach if you're doing it over the 2-year deal there. Now, buy-to-let in your personal name. I don't suggest that you buy new properties like this, but most buy-to-lets are already in people's personal name because they've been like that for a while. And good news, some big drops this week. We've talked about NatWest dropping rates, and we can see it here. So the buy-to-let in your personal name, NatWest have the best deal on the market at the moment. They dropped to 4.49%. That's good. That's really good. Fees are 995, which is fine. I mean, if you split that over a 500 grand property, it's barely any, is it? And the loan to value is up to 75% loan to value as well. The 2-year deal is 4.84%. Again, that's gone down. Again, this was 5.515, I think, last time we did this. So this is good. This is really moving in the right direction, and hopefully we'll get a little price war like we did in January, and they'll move again for next week. So do go and check this out. And if you got this far in the video and you haven't done previously or done on this video, do smash the like button, guys, on the video. That really, really helps me with the YouTube algorithm. And I'm sure you know somebody that needs a mortgage right now. So click the share button. Then you could WhatsApp it, Facebook message, email it, email the link of this video to them. And while you're here, smash subscribe as well. We're nearly at 25,000 subscribers. We're definitely going to hit it this week. Definitely, definitely, definitely. So have a look around this video, see how close we are. So do smash subscribe and hit the bell notification. So let's have a look at residential mortgages. So these are residential mortgages if you've got a 25% deposit or 25% in equity, right? So that's one that we're going to look at here. Now, Barclays, I did a video on Barclays this week. They're now coming into the best rates here. So 5-year rate is 4.38%, which is down, which is great news as well. 899 in fees, 75% loan to value. That's decent. 2-year deal with these guys is 4.74%. Again, down. This is what we want to see. We're close, aren't we, on a 5-year deal? We are close to getting sub 4% mortgages again. That could happen this year. So that's good to see. Now, let's look at the residential mortgage with a smaller deposit. So this works for first-time buyers. It works for people with small amounts of equity in the house or a small deposit, right? Whatever. So Barclays have got the best 5-year deal. These are slightly more expensive. Of course, there's more risk for Barclays, right? You've only got 10% skin in the game. So 5-year deal is 4.75%. That's a decrease again on last week. Brilliant news. That's what we want to see. The fees are 999 with the Barclays deal, and you need 10% deposit. Right, pretty good. 2-year deal, the best place to go to is Virgin Money. 5.19. That's also down. Loads down there. It's good. 995 is the fees, and again 10% deposit. Now, what I'd like you to look at here is on all of these, the 5-year deals are significantly cheaper than the 2-year deals. Why is that? Well, that shows us that banks are confident, highly confident in fact, that rates are going to start moving down. Might not be this year, hopefully it is, but they're confident that over that period of time, rates are going to drop. And so because of that, they want to get you locked in on a higher rate for longer, right? And that's why they're giving you a higher rate on a 2-year deal than on a 5-year deal. Every lender's moved to this now. Sometimes it flips round, but now the 5-year deal is significantly cheaper. That's really interesting to note that. It's a good guide on where the market's going to be. So, obviously, there's hundreds of lenders out there. Do you know any other lenders that I should be looking at? If you do comment below and let me know. Do comment below if you found this useful, or say hi. All of that helps with YouTube's algorithm. Smash like. Do subscribe to the channel. Let's get that 25,000 subscribers this week. And check out all the other content on my channel, including that video over there.